comes down to computers communicating.
The information superhighway can be a confusing mix of on-ramps and off-ramps.
Bitcoin is worthless artificial gold.
Is it still rat poison?
Probably rat poison squared.
We need to get into the world of, okay, this is actually foundational technology.
What the Internet of Money does is it creates a single network which can do a microtransaction to a gigatransaction.
The Internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
Welcome back to another episode of Final Settlement. Today is Monday, June 9th, 2025. How's it going, boys?
Fantastic. Going good, man. This world's crazy. I feel like Bitcoin's volatility. You go to bed one night, it's 76. Now you're at 105. You got Elon in, out, Trump.
The end of the bromance, the rekindling of the bromance. Where are we at?
You got Circle, trading at, what is it? They were priced at like $28 a share, and they're at like 120 or something crazy, and everyone's screaming on how Tether should be more valuable. It's a wild world. It's an amazing timeline. Yeah. No shortage of topics. We could jump into, Michael, your favorite topic, stablecoin news. There's some activity there. Obviously, the Circle IPO that you referenced, Liam. I know you've done some work there. Maybe is that a good place to start? There's no shortage of topics. What do you guys think? Stablecoins.
Yeah, let's hear it.
Yeah, I think it all kind of makes a lot more sense now. I think when one of the reasons I would hope we provide value on this podcast, and I think it's helpful for us, is when you go deep down the Bitcoin rabbit hole, you end up in a everyone has their own frame of reference. So you have your myopic view, I guess, because everyone comes from a different background, and it's ultimately up to the individual to be a critical thinker, to continue to grow the thesis, understand less on what Bitcoin is. That's always a journey, but then how does it play into the market? How will it integrate? How will it get to be money at the end of the day? And other people, and everyone has their own reference, their theses and backgrounds. And so point in saying that is stables have been of interest the past couple of months because of this market structure and thinking about, well, what does it mean for the landscape? And I started to get really bullish after seeing, I forgot what it was. I think it was, I don't know if it was the approval or what was getting passed through the House, but it was ultimately this understanding that the path to Bitcoin is through stablecoins at the end of the day. That's the whole thing. When you think about whether it's the digitization of a dollar to get access to BTC, all the way to how does somebody start to think about permissionless or quote unquote permissionless, getting rid of intermediaries and movement of global capital. Well, a lot of people don't just necessarily jump directly to BTC. Stablecoins will be that first layer. And there's a whole slew. That's just high level. But it's insanely bullish for everything happening. There was a recent podcast I shared in the Slack channel before this with Scott Milker and Bo Hines. That was about 20 minutes long. That took place in Vegas. And they were referencing ultimately a little bit about the market structure of the stablecoin bill. But also they have an implementation method. He's telling you play per play. It's Tom Brady sitting behind the scenes watching Monday Night Football and explaining what's happening in between that game. He's explaining where we sit today, as far as from the regulatory approval, market structure coming next, and then how they have an implementation method with the banking system as part of the next part of this cohort. So I think a lot of people think there's chaos and they're looking at these different sectors, but at the end of the day, that's what's happening. And then I guess the last part is it makes complete sense why Circle's trading at the premium they are, is because institutional allocators ultimately hear stablecoins and they think blockchain, they think innovation, which there is some innovation. And so it's their way from an institutional allocator's perspective to express their view on the asset class because there's one publicly traded vehicle for it.
And just to go a little bit deeper there, this all is going to tie back to Bitcoin. So bear with me here, but it's helpful to understand how institutional money gets out, interested in Bitcoin and gets exposure. So if somebody wants to buy or sell Bitcoin that, is doing a substantial amount, they typically go to a prime broker. That could be Coinbase Prime, Binance has that aspect as well, or an independent entity like SFOX. They will either deposit their Bitcoin or they'll deposit their dollars. And they typically can deposit all of it or do some amount on credit as well. And then through those prime brokers, they will get the ability to buy or sell large sums of Bitcoin and settle that through independent OTC desks, whoever have the best, amount or can give them the best price. The OTC desk then will either hedge out of the spot immediately, or they will then, warehouse some of the inventory risk. And that's kind of how the market works. So taking a step back to 2020 and 2022, when everything went absolutely sideways, you saw, Alameda, part of FTX, as well as Genesis, blow up and have they weren't able to adequately hedge their risk on the OTC side of things. So and on the prime broker side, they don't necessarily need to deposit all of their capital, so they can get loans on their and have essentially a margin on how much money they can trade. And so when they go underwater, and there's two aspects to this as well. They can put their Bitcoin in BitGo wallet, or they can put their dollars in a bank. And when everything blew up, because the main banks were Signature and Silvergate that were serving the Bitcoin and crypto industry, they essentially had to move to another asset class, and that's where stables came in. And they just wanted to settle in stablecoins rather than just have risk to a bank where they couldn't necessarily, they didn't know if the bank was going to go under, and the bank has their own loans and counterparty risk as well. And so one, they had to do it out of necessity because the bank went under, and then two, there's just like reduced friction and layers of risk in that involved. And so the industry has kind of shifted that way, and it's not necessarily just going to be people that want to trade Bitcoin and broader digital assets that want exposure to stablecoins as their ultimate settlement layer, but it's going to be other industries as well that just are a little bit more worried about the risk at the margin. And so it's you keep on seeing all these banks coming into the space and trying to get their own share of the stablecoin market because they realize that they're going to lose deposits in the end. And tying this all back to Bitcoin, it's ultimately all about the trader, and it's typically hedge funds trying to understand their counterparty risk. And these stable coins still have counterparty risk as well, whether it's Circle, Tether, or whichever one comes next. And ultimately, I think that on the margins there will be more really large players that are educated about this and really understand that Bitcoin is really the only ultimate risk off asset where they can ultimately control their keys themselves or be in a bankruptcy remote account that's not controlled by a single counterparty on the other side.
Yeah, no, it's really well said. And I think the biggest thing to me is sort of, Michael, what you've alluded to is like just normalizing digital dollars and having that basically UI UX get very clean and frictionless, where it's like the dollars sit right next to your Bitcoin, and that chasm that has previously existed just gets smaller and smaller and smaller to where it becomes commonplace and extremely easy to save in Bitcoin, spend in dollars. And to your point, Liam, be more and more detached from some of the more inherent risks of the actual traditional banking system. And so up on the screen right now is Circle stock price up 17% already this morning. I think it opened at 31 last week. Liam, you said you dug into a little bit around Circle specifically over the weekend. Any thoughts around where this is trading currently?
Well,
yeah, I mean,
before go in there, because I'll let Liam go there, and then I'll reference something about Circle. But before going to that, everything Liam shared is absolutely right. I'm glad he ended on the point of like stablecoins are going to affect much larger industries than Bitcoin, and that's what the plan is. And there's a notion that we talk about a lot internally, whether it's an Onramp or early riders, and you're early on to something when you're kind of building as close to Bitcoin and the underlying thesis or a lot of the anecdotes you reference. And when I hear all the stuff we're just talking about, it's like everything's good for Bitcoin, everything's good for Onramp and early riders, because what Liam just described is ultimately what I was looking up the date. It was July 15th. It was episode 8 of the last trade. We talked about Larry Fink was going to securitize, or I was referencing Larry Fink was going to securitize Bitcoin. And I was thinking at the time, and it still is, but the ETF is the security. But the reality is everything is going to get securitized via digital, whatever, tokens. And then everything is going to be traded between these USDC or whatever the token is. And a lot of people are going to conflate what Bitcoin is or what value is, what the stable coins, and as Liam alluded to, they're all, permission blockchains, they're not permissionless. And over time, as certain individuals and groups build businesses to the underlying principles of understanding the robustness of Bitcoin and, aligning with the value there, they're going to reap outsized rewards. In the same way we talk about Bitcoin and people listen here and have majority of their wealth in Bitcoin and understand the reason why, it just takes time. And we're just ahead of that curve. So anyway, that was just kind of like the anecdote of when you think about investing in the ecosystem as well. If you're playing a game for 3, 5, 10 years, you're building businesses that when the market wakes up to counterparty risk or realizing who holds the underlying or what are the trading pairs, like stablecoins are great. And I think if you're not enough Bitcoin companies implement and integrate them, and that's like an interesting thing in itself of imagine like whether it's enterprise business, exchange like Bitcoin and stablecoin working nicely next to each other for global accessibility. You don't really see a lot of that. You generally see crypto firms. So anyway, there's a lot of opportunity out there, but it has to be rooted back to the fundamentals of where this goes. And where it goes is the market realizes 21 million is non-negotiable, and then more and more people want that asset.
100%. And stablecoins have kind of just taken some of the good aspects of Bitcoin and implemented them on the dollar side of things. I mean, the real when you see the crypto industry at large, there are two main drivers of value. One is liquidity, which the dollar has plenty of. Bitcoin is second to that, but dollars don't necessarily have a stable store of value over a long time horizon. It continues to be debased, and if you can have a slice of the 21 million, you're going to continue to have that no matter what. And so it's a marginal upgrade to the banking system when you think about counterparty risk. It's not permissionless, but it's moving in the right direction. And tying back to Circle a little bit too, I certainly I haven't looked deep into their financials, and definitely not going to. I'm not interested in investing in a stablecoin at all, and so definitely not going to make a call one way or the other. But when you kind of look at how things are structured, it's primarily USDT, Binance are the biggest trading pairs in kind of the East, and that's how they run their Binance Prime desk. And then, but over here in the West, it's primarily using Coinbase, and they've integrated deep with USDC. And so it's not necessarily a call one way or the other. It's just kind of understanding where the world is and how institutional money here in the East is primarily looking at USDC, because Coinbase is partnered with them pretty deeply in terms of their preferred stablecoin.
Yeah, I think on the stablecoin side and maybe transitioning, I think it's going to be fun when the real players get in. Like when it came out publicly that Fidelity was testing something there, and we know that some of these I think it came out that the big four banks were working on something. But I think that ties into, let me see if I can share my screen really quick. Oh yeah. So Brian just popped that up as well. I mean, this was another kind of really bullish thing that I don't think got enough juice. Brian pulled up, I think it was originally like one of the bigger tech platforms. I forgot what the source was, but Apple, Airbnb, Google, and I think Uber are referencing using stable coins. And then I think what's his name? Dara from Uber referenced that Bitcoin is like a store of value, or just gave some kind of credence, which you generally don't hear Silicon Valley talk about. But what I was going to pull up really quickly was Open Range, the newsletter from Onramp, or I'm sorry, Early Riders, that comes out Sunday from Liam. There was a few notable things, and really two that tie into this. Let me see if I can do it.
I have it. Here we go.
Yeah, so the first one was going to reference, because it ties into this, is the industry and institutional updates. JP Morgan will now accept shares of BlackRock's iShares Bitcoin Trust. I think that came out after we had this episode last week. And I think obviously that's huge, given that they referenced they're going to allow for, I believe, all wealth clients, or all clients. It's not just going to be the private wealth, to get exposure or access to loans, but then also various other exposures. I don't think it was just IBIT. It was referencing other, Bitcoin or crypto assets. And I think that's important, because when you think about, this is the direction all banks will be going, is lending against the underlying. Not only do they have the lowest cost of capital, but they also will be having stablecoin integration. So you think about the ability just to lend against your assets sitting right there in your bank account, like not only for adoption, but for like the price, the liquidity from not selling. I'll pause there. There was one other thing I wanted to call out on this, but
Yeah, lots in the newsletter that came out yesterday that we have up on the screen here. As you mentioned, the JP Morgan news, Circle stuff. One thing I thought was interesting was Sberbank, which is Russia's largest bank, basically announced some sort of quasi-bit bond structure that they're going to be pioneering. So I talked a little bit about this on the last trade from last week, but this idea of sort of Bitcoin in general, strategic reserves, bit bonds, these tighter integrations with the traditional finance system. The United States and this administration has kind of just put these things into the zeitgeist, and now you're seeing sort of that flow across the world. Russia, as an example. There was also South Korea last week. Their newly elected president, a lot of his campaign promises were around legalizing Bitcoin ETFs, which are still not available in that country, despite it being, I think it's 12th largest GDP in the world, and also a pretty crypto forward populace, actual citizens and their interest in crypto. So you see sort of a lot of this flowing across the world, even though, I think there was some initial fanfare around the strategic reserve. Haven't had a ton of follow through on it. Like you mentioned, that Bo Hines interview from over the weekend. I think it's coming back to the fore now. I forget the exact timeline on when the report is due. That is basically going to reinvigorate some of that discussion around, well, one, the audit of how much Bitcoin do we have, and then two, how are we potentially going to accumulate more Bitcoin for reserve. So expect that sort of, the next month or so to sort of gain more traction again and come back into the limelight. But the point is, just us saying these things has sort of manifested across the globe, and you're seeing some knock-on effects of that.
Yeah, 100%. I mean, the biggest one still that's at the forefront of my mind is I forget if it was MGX or Mubadala's $2 billion investment in Binance. I mean, that's a big sign of the Abu Dhabi Sovereign Wealth Fund getting involved, and they have shares of IBIT, and they certainly have the underlying as well. I think it's just like they're one of these countries who kind of positions themselves as partnered with a bunch of different, both the East and the West. And I think that the rhetoric that's going on, both about Russia's largest exchange as well as their largest bank, giving institutional access to at least dollar-denominated Bitcoin bonds and futures trading is definitely not anything to understate. It's kind of the geopolitical flow of funds is definitely shifting a little bit more towards Bitcoin as well, just on the margins.
Yeah, I think there's something interesting. It's like a paradox that the more global trade breaks down, the more people drive to Bitcoin. Because if you think about it, if you had treasuries and dollars as your kind of medium of exchange and store of value, and as that becomes more and more untenable, naturally people will go towards Bitcoin and understanding it and understanding the properties. The other aspect that was in that document, which we're doing so many pods now, we talked about it, it's worth checking out. It seems to be enjoyed by listeners, is the the broadcast. I like to joke and call it the broadcast, but it's a broadcast we do every other week with Brom. And one of the things we talked about on that came out Saturday was the Bo Hines being down in El Salvador. And I think it's a huge deal for a number of reasons. And it's actually, I was talking about it before listening to his pod with Scott Melker, but I think the key thing here is that these guys are actually playing to win, in the sense that like his boss is David Sachs. David Sachs is a tenured world-class entrepreneur and then venture capitalist that's leading this charge. He takes the job seriously. I mean, it's shown based on the divestments of his exposure into the sector for trying to get a job done or to do the job in a independent way. Point being is they're trying to understand who and what has been done previously to figure out how the U.S. is going to step into this in the most efficient way and be a leader for not only the next 5 years, but maybe for the next 50 plus years. And so I think that's just a big one that we haven't seen. And I think this ties into, again, the opportunity set. When you think about everything coming in the news, all the different banking integrations, fintechs, now you have tech companies, there's going to be no shortage of opportunities to jump into the space, whether it's to work, invest, build, to just keep your eyes peeled, because every day we look at different new opportunities, whether it's in different parts of the market or the United States or different parts of market structure and how Bitcoin or other assets can integrate with other assets like financial, real estate, stocks, bonds. So it's just an exciting time.
100%. One thing I wanted to pull up was sort of related to this is this chart from Tougher Digital that just sort of puts us all in context of yes, there's greater recognition around the asset class, but the reality is most of the capital is still unallocated, and so this is just putting some of that in context and looking at U.S. wealth platforms, top central banks, 401k plans, state pensions, and corporate cash, totaling over $100 trillion. That is basically unallocated to the asset class. And as we know, Bitcoin's finite supply, it's going to flow into there, and there is already and will be increasingly this just massive supply demand mismatch as we move forward. And the additional context here, 5 trillion. So if you're just putting a 5% allocation on that 107 trillion, 5 trillion is 116 times larger than all the net flows into Bitcoin in 2024, which were substantial. Like 2024, there was a ton of flows into Bitcoin via largely the ETFs. And so this is just a massive wall of capital that is still unallocated. And part of this has to do with turning on the access. We've looked at charts in the past of a lot of the wealth platforms, wirehouses, banks are still not even allowing access to things like the Bitcoin ETFs. And so slowly but surely, all of that's getting turned on. And this wall of capital is just going to continue to flow. Where do we want to go from here? The big, beautiful bill, Trump Elon bromance. Any thoughts?
And I mean, we should touch on Trump Elon, but we should come out with we come up with whatever takes we want. I just can't help but look at these charades and just think that we're just all watching a movie. It's all just so insane.
Yeah, you think I think there is an argument that it was somewhat manufactured in the sense that Elon, to go back to his to go back to basically focusing more on Tesla, he needed to detach himself from the administration in some sense. So I think there is that thought that maybe this was all sort of purposeful to have sort of a clean break. And but I think there was some reconciliation. He's retweeting to Trump again, and so maybe they patched the beef a little bit, but hard to tell.
Yeah, I mean, he could have just worked on Tesla without, doing all of that and, making his stock dump 17% or whatever it was in a day. I think, I don't know. I don't think that was, theater on purpose, diverting away for something. There's no shortage of conspiracy theories out there on, the Epstein files and everything like that. But it just, there's there's just marginally less respect for the existing system going on, whether it's how the president and the world's richest men operate, down to the financial system. So
yeah, I think that's the key to take from all of this, because we have to I personally have to, there's a fine line on these pods of we're keeping them professional and related to financial services and all of that. But the reality is, you have to be long chaos or long volatility and counterparty risk where we're going, independent of what's happening. It doesn't matter if Trump or it's Elon and Silicon Valley elite running the show and Trump's a puppet and was bailed out. There's all these ways to look at what's actually happening here, and then whether Palantir and everything that's happening from a technocracy or technocratic state. Independent of that, the world is fundamentally changing, and when it changes so drastically, you naturally are going to have disorder. And with disorder comes lots of opportunity, but also a lot of potential ways that you can lose. I think it was said really well as the dollar isn't just inflation isn't just a marginal problem; it's an existential problem. And that was really key for me to hear, because ultimately, I think that's why a lot of people listening and why there's so much room is everyone thinks it's a marginal problem, and so that if I don't allocate, it's it's okay, I got something else, or I'm holding assets in a different form. A different way to store value, when in reality it's an existential problem, and people should just act accordingly. And I think this is what ties into it, maybe from a broader perspective, is you just don't want to be at the whims of any political faction, and then also the banking system, given we all know what's happening across the world.
Yeah, I think just as it relates to sort of tying the loop on the Elon stuff and how it relates more specifically to Bitcoin is, it sort of felt like, whether this was real or not, whether it was, more of a show than anything, I think there was Elon being very publicly facing about realizing he couldn't stop the train to an extent, right? The reason he backed this administration, the reason he wanted to get involved in government was to attempt to stop the train, or at least steer the train back onto the tracks in terms of cutting spending in some material way, which really hasn't been done in several decades. And it sounds like he just got frustrated with, primarily stemming from this spending bill that's trying to be pushed through by Trump and his cabinet. And there was just this realization that oh shit, there is no political will to actually meaningfully cut spending. And then of course, everyone on Bitcoin Twitter is reply botting to Elon's tweets being you're so close to understanding the solution here. You obviously understand the problem. And again, he's talked about Bitcoin in the past. Tesla, SpaceX own some amount of Bitcoin. So it's not like he doesn't understand this stuff. But there's this natural inclination to be just say the solution, man. You obviously understand the problem.
The beauty of individuals in Elon is Elon. I mix up Elon and then our Elon from New Edge. So, but Elon he's a troll, and probably trolls kind. So referencing, I remember what was it, 21 or 22 is Doge is the blockchain of the future. And it's it just has higher throughput. And it's if anybody took that at face value, it makes zero sense, because if the guy has a brain, a very probably big brain, and then the other one is the debt situation. So it's just it's all just theater in some form or fashion. But two things to just call out, and curious where you guys want to go, is because I think they're I haven't looked deeply into them, but they're big, is South Korea. And what's going on there. I don't even know who the individual is, if he's in office or potentially going to office. And then, it went away from me, but the other one that I had pulled up is the pump.fun, $4 billion raise. Because I just think it's worth it calling out.
No, I thought that was fascinating. So they're raising $1 billion at a $4 billion valuation. And to me, it's just indicative of this sort of something I've talked about in the past, of this tacit admission of the broader crypto Bitcoin Stablecoin space has really devolved into just the gambling casino, and this is a strong signal of that. Is okay, that's where the actual value lies, is just this hyper powered online casino. And so I think that raise is very indicative of that sort of transition and devolution into that.
My favorite part of that take, and I know I'm gonna get shit from this, probably from listeners, especially from Liam, because he's closest from coming from TradFi, is I don't see any different than pump.fund in the S&P 500 or public equities. Like, because, there's obviously a slight difference because there's some companies that, generate value. I'd make the case that if you had to rebuild them, they'd probably get, built more efficiently and wouldn't be around. But independent of that, is they're all trading on vibes and momentum. It's similar to the circle. What I was going to reference when you asked about the circle where it's trading, it's like, well, it's obviously trading overvalued because everything's trading overvalued. And then it just all comes down to the vibes. And so pump.funds tokens just trade on vibes and mimetic and whatever you can get on social and who you can pay to amplify it. And so it's very similar to like anything that's out there trading. It's based on like, who do you know, how you can pump it. That's really, a lot of people just get caught without thinking critically or from first principles, is because you see people in the news or you hear people talked about in the recent treasury company or whatever. And it's like, there's capital behind that. And there's a reason why you're seeing it. And so when there's capital behind it, the reason why you're seeing it doesn't necessarily mean it's bad, but also doesn't necessarily mean it has fundamentals or is good. There's just money. So you're naturally seeing it in front. And this is where I won't name any conferences, but they're naturally now starting to be like the ultimate top of funnel for the ultimate like mother of all shitcoin treasury companies. It's like, let's just take all the capital from the front end, pull it in. And it all goes back to, well, what is money and then what's credit? And Bitcoin's money, you can take delivery of it. And whether it's pump.fund tokens or treasury companies, you ultimately don't have any claim on anything other than the exposure to the ticker, which is the same as a cryptocurrency.
Yeah, I think that's right. I mean, I think I would say the pump fund raise is more akin to like DraftKings raising. Like it is literal casino vibes, as opposed to like, operating companies with a business model or some form of cash flows, right? Like there is some distinction there.
But even like
Tesla,
Tesla's a great example because I haven't dug deep, but like we'd have to write a whole paper on this, but ultimately like they couldn't live without the fiat system because of the subsidimes and the amount of capital they had to raise. So it's just like, so then what are we, that's the angle. But Liam, I know I saw you take a deep breath there. So I'm really looking.
I mean, like I just, there is kind of a difference too. Like let's take a step back. Like if you're an HVAC company and you're providing a service that people will pay for, just because the public market is not trading your vehicle or publicly traded company at what should be the right valuation in terms of Bitcoin, and if they couldn't access cheap amounts of debt, like there's still underlying value that they're providing to the world that I think isn't necessarily there on the pump.fund side of things. And yeah, there is they're trading at a massive premium to what they should be if we're being honest with ourselves and taking a deep lens into like, okay, how much more Bitcoin can they produce in the future? Versus, I haven't ever gone on pump.fund and I try to, keep as many brain cells as I can by not looking at it too closely. But I think that there is definitely a difference there.
Yeah. I mean, obviously there's a difference if somebody's producing like value in the world. The thing that I think nobody really takes account for in prices is it's kind of like in life, we always are good if it doesn't relate to us. Like if it's not our problem, if like somebody doesn't have exposure to Ethereum and they only have Bitcoin, they're fine with Ethereum being crap. But if they have a little exposure to Ethereum, it's like, well, hey, let's be open-minded. And so it's just like people talk their book. And so when you think about the capitalization or market cap of companies, if somebody's in equities, they're in their whole Bitcoin, they'll naturally say, well, of course, real estate's going to be repriced, right? Well, let's have the other discussion. Well, of course, equities are going to be repriced because if you have to look at just from a natural like amount of not float, but bloat in a company that exist from, ZERP and government subsidies and, being able to take, bonds out, like IBM's the best example, but there's no shortage. Like what happens when people sell their equity for BTC when they realize, why am I holding this? Well, that company actually might go out of business because they fundamentally might not have the fundamentals to be alive anymore. And so that's kind of what I'm grafting or I'm going towards is that all these things are trading based on the amount of like liquidity in the system and then vibes that are based on it and are going to get repriced. And when they reprice, they may actually just go out of business and nobody actually knows where the bodies are buried. We know pumped up funds are probably a big body just because there's nothing. It's literally a casino. But that's the point I'm trying to make is I don't think most people like think of the world being repriced in that way, and what they're holding is.
I think that there's a little bit of a difference there though. Like once the world gets repriced accurately, like a boring like HVAC company or whatever can be traded at like 95% discount where it's today in terms of Bitcoin, but like the pumped up fund and all of that is just going to be traded at 0 in terms of Bitcoin.
That's not what I'm saying. I'm saying that a lot of these companies don't have sustainable business models.
Yeah.
Like they didn't actually build to have a sustainable business model. It's one thing if you've always been, built with like fundamentals and then you're trading publicly and you're positive in the green, but there's a lot of companies that don't, or that's what I'm referring to, or you have to pay back your bonds and now that's when you're out of business is the point.
Yeah. The only other data point I was going to bring up around this is, so this is basically like a distribution of just the past month of pump fund. And so like basically the vast majority of people lose. And so it's actually like worse EV than like literal gambling at the casino. And so it's more on par with a literal casino, actually like worse EV than a casino. Whereas like if you compare that to the equities market, like I think there is a parallel there in the sense that what we know about the concentration of returns in the S&P, for example, right? Like Mag 7 is driving the vast majority of performance. And, actually the majority of companies are underperforming the benchmark, underperforming, generally speaking. And so there is a parallel there. But, again, I would put this more akin to like literal casino gambling. Yeah.
Yep. I'd 100% agree. And, kind of ties back into the Trump company raise. And so, they're it's interesting to see that they're now launching their own ETF, and you guys may have touched on this outside of this show as well. But we haven't really seen this with they raised their $25 billion or $2.5 billion as a convertible note, and it looks like they're actually taking the steps to launch an ETF with that. We haven't really seen many of these Bitcoin treasury companies. I don't know if they're going to be considered one, actually go and do something with that and try to create a product that, they can get fees on with it. It's just the first one to go in this direction. And I think it's worth watching to see if and how successful it will be.
But like, why would it be successful? Why would anyone buy the Truth Social Bitcoin ETF as opposed to IBIT?
The name on it, 100%.
Yeah. It's fine. Yeah. If I was like, this is the pattern recognition when I see like, being around the space and Solana being able to buy it under $1. It's like you saw like it was great marketing. And I look at something like this and even the treasury companies, there's a principled version of why I don't trade them because I see them as zero sum. But if I was looking to dump on somebody, I would definitely buy Trump's ETF because to what Liam said, it's the president of the free world, and he has his own Bitcoin ETF. Like it has to be the best one. There's better Bitcoin in that ETF.
Yeah, but it's not going to outperform Bitcoin. Like it's different than the treasury companies.
The Bitcoins in the ETF by Trump are fundamentally better than the rest of the market.
Oh, the best Bitcoins.
The best Bitcoins. They were made in America. They've been blessed by him. Like it's just better. It's better than
that would be something. Yeah, these are American-made Bitcoins only in this ETF.
I'll tell you, it is objectively better than Bitwise's ETF because Bitwise will tell people to go buy XRP and lobby on behalf of there. So like Trump, at least he's just staying principled with just the Bitcoin ETF.
Fair.
This is honestly how insane the world has gotten that nobody actually talks about how insane the world has gotten. So we might as well just like bring it up every week until everyone realizes that we were just explaining how insane the world is. Because you could just buy spot Bitcoin, and you know what? I can't wait till we have some fun stuff coming out of Onramp. And about 2 years ago, we launched the Onramp Bitcoin Trust. I still fundamentally think it has pensions that have allocated to it. I think it's the best product in the market. And it's not us talking our book. It's from, sophistication perspective, whether it's how the units trade to be able to deliver Bitcoin in kind. It's a private placement, requires accredited investors, but you could take delivery of it, and then it leverages multi-institution custody. It's just a beautiful product. The problem is that majority of the market, A, doesn't know who Onramp is, but 2, B, doesn't understand why you would want it, because most people have 0.1% exposure to the ETF or 1%. But again, the whole thesis that we talk about and why I always bring up the treasury companies is it's not in congruence with the world. It's nonsensical, however you want to phrase it, why institutional allocators or an individual won't eventually understand what Bitcoin is and realize they need to get out of that position, because there's like 10 layers of execution risk embedded from the Bitcoin hitting their wallet to them delivering. So anyway.
Yeah, 100%.
We want to talk on the South Korean new president deal.
Yeah, I'll pull up that link if you want to start.
Are you moving to South Korea? Asia Pacific's heating up. How do you feel about you being in Singapore for like maybe a year?
Singapore is not South Korea. But
well, I meant Asia Pacific, so you can get to. I figured you wouldn't have to go to South Korea. Singapore was a nice middle ground.
It's nice.
Yeah. No, it's cool to see. I think I wanted to tie this back to what we talked about earlier. A couple weeks back, which was the odds of a non-Bitcoin digital asset president getting elected. I think has gone down significantly over the past year or so. I think at least while Bitcoin is not 80% off its all-time high, we're going to see this trend continue. I think that there's no significant benefit to being anti-Bitcoin, anti-digital assets in general. And I think that this can only be a pro in terms of marketing your own strategy. The vibes are higher as we talk about when talking to other young people in particular. But it's good to see. We'll see how this, if and when this actually does get implemented, because a lot of these politicians, as we're seeing, just kind of talk their own books in order to get elected. So but I think it's great to see on the margins.
Yeah, I think there was a few key points from this. One was allowing spot crypto ETFs, also pushing forward a yuan pegged stablecoin, and then the third, which I don't see in this publication, but was also included in some of his campaign, was allowing the National Pension Fund, which I think is has close to $1 trillion in it, to invest in Bitcoin as well. So yeah, very, very positive in my mind. I don't know if there's anything else there we wanted to touch on. If not, I could pivot. There is something I did want to pivot to that is not as related to Bitcoin necessarily, but more on the AI side. I don't know if you guys saw this report that Apple put out, basically saying that AI reasoning models aren't actually thinking or aren't actually reasoning. It's all just memorization and pattern recognition. And why this is interesting is basically because Apple is super behind on all of this. And so one way you could look at this is them basically coping and just fudding everything that's going on and saying we're not actually making the progress that we think we're making. And we're way farther from actual AGI as some of these other companies would suggest. And basically the takeaway is they effectively created puzzles or things for these models to think about that they haven't been trained on. And once they're looking at things that they haven't been trained on, they basically hit this wall of understanding and reasoning. And so what that would tell you is that they're not actually thinking, they're actually just memorizing what they've been trained on, which I don't think is a new novel theory, but it is just funny to see Apple put this out, given that they are sort of behind all these other companies. Thoughts?
Yeah, I think this is just going back to what we've been talking about for a long time now, which is just the incumbents are not going to lead on the margins. They're not going to be, the people that can innovate. I mean, the great thing about, the one advantage that incumbents have when it comes to AI is, having all the capital in order to train the models, deploy all the data centers, everything that you need in order to outcompete, because there are massive efficiencies when it comes to scale and with these LLMs. But it's really just kind of disappointing to see that Apple is so far behind all of the others, because they're just going to kind of get their lunch eaten. It looks like. I think we always kind of knew that this was how these models operated, of just like kind of checking other vectors and using reasoning behind them. They're not actually thinking themselves. But yeah, it's a little disappointing to see, but expected.
Yeah, I think without being technical expert, I think the point you made, Liam, is like around the incremental nature or how fast it's moving. You can surmise like this stuff is going to disrupt a lot, especially like middle management. The heuristic that I'm personally, because I just don't have the time, I'd love to look into more and like play with it. I'd love to be a viber and just vibe code, vibe market. We have some on our team. But is like when you really start seeing people anecdotally lose money or assets or get phish and scam, because I think when it gets that good is you're kind of like, no, because there's a dynamic nature to this process, right? You see this like, I remember like a year ago, and then it came up that it was recently with Elon talking on YouTube, where like, have you guys ever gone on YouTube and then you'll see like the commercial come up and it's like Elon talking, but then it's
it's like a literal scam.
It's a literal scam. And point being is like when you start to see these become very like dynamic and in real time, to the point of like that reasoning, that when somebody's asking the question and you're able to like actually bring together relevant information based on time, local, understanding of who the person is, like that's when you start to like, and I think it'll happen in incremental steps, but that's just something that I would use as a heuristic to understand if this shit's really getting out of hand. Because right now, like you don't hear about that. You just hear of ordinary phishing and regular robocalls happening.
Yeah. Maybe one other thing, just back to sort of global adoption regulatory front. This was also from last week. The UK sort of taking a more accommodative stance, which, I think they've been particularly adversarial to crypto and Bitcoin historically. And so this is a bit of a pivot that they announced last week to lift a ban on the sales of crypto exchange traded notes and sort of start to allow some more access to these things. So again, it's just this game theory of like, now it's in the zeitgeist, and now everyone's sort of putting their chips on the table and figuring out that they need to be more accommodative than adversarial, which was the historical norm.
Yeah, I mean, this just all goes back to the point where the most sophisticated people want Bitcoin. If they can't get access to it, they're just going to leave your country, and you're not going to be able to, get their taxes anymore. And so you may as well lean into it and embrace it, and take the capital gains taxes on it. I think it's win-win for everybody involved if the current status quo keeps up. I don't love capital gains taxes, but that's not going to change anytime soon.
Yeah, this isn't exactly related, but it feels like we're winding to an end. Is like, what's going on in LA?
Yeah. I don't know. You have thoughts, Michael?
I mean, I don't. I just go on. I'm just getting those like 2020 COVID vibes, from kind of social unrest. And the reason why, I guess to tie it back to this is like, people get unruly and they don't follow the law. So like, imagine somebody has wealth. This is like California. Like empirically, I would say directionally about half of all the Bitcoin sits in California.
All of the United States, Bitcoin
in the United States. Yeah. You can make the case potentially because of Coinbase. But because of Silicon Valley and just, technologists, they were the first to really see it. The point being is like, that is it came out last week. I don't know what, it's not even in stone, but whatever it was with the assets being like on an exchange, if you pass away and they have access to or rights to. But point being is like California holds a lot of Bitcoin. There's a lot of wealthy people there, and it's practically like a failed state at this point. And so when you think about custody and your arrangements and how you do it, like that's kind of again from how we started the show as being long volatility and counterparty risk. You want to be very careful with how you're positioning your money. So anyway, that would be how to tie it back to.
Yeah, 100%.
Yeah, I mean, if you're not able to keep people safe, then people will leave, especially when their money and personal safety is involved.
All right. Anything else, boys, before we wrap?
We should wrap. Sometimes if we come up with one of what do we want to see or what's missing, there's like no shortage of stuff. So like, but I have something top of mind, and I'll keep it quick if you guys have something else.
Let it rip.
We can extend. We just need. We talked about a little bit a few episodes ago about like the piggy bank and the kid idea, and I still think that's awesome and should be done. But I think there just needs to be a like very asset light exchange that's denominated in Satoshis and probably just built on Lightning or maybe even eCash or some hybrid of that. You'd have to figure out the regulatory setup on how to do that, but it can't be that complex. But the main point of that is just like where the market's heading. There's more and more people getting out of their skis when it comes to leverage and thinking that 100K Bitcoin, they can't buy a whole Bitcoin. And there's just something to things are going to start getting priced in sats. People are going to start, paying in sats. And there's some market advantage and opportunity to educate around financial wellness on just like how far your dollar goes or now on sats and how it incrementally goes up monthly and annually. And nobody's really like coalesced around that and done it in a good way that I'd really love to see. And anybody can do it. It's not the hard part. I think really what it's going to come down to is the taste and commercialization of like, how do you actually bring that to market and make it, a viable business?
Yeah. I mean, I would say like Block is probably closest to doing something like that, just given the work that they've done on the Lightning side of things, sort of in parallel with their, Cash App and traditional exchange and stuff. So that would be my guess in terms of like who's closest to doing something like that. But to your point, it might make sense to someone to have a singular focus on something like that. Would probably be pretty fruitful.
Block reminds me a little bit like Fidelity. While I love both of those firms, the reality is like what Liam talked about earlier. I don't see both of them. They may lead from the incumbents direction, but they won't lead from like 20 years from now us looking. And it's just basically because there's too much inertia. Like when Block has to come up with something or wants to educate the market on Bitcoin, like not only do they have all the other things you referenced that they have to work on, but also it's always going to be some like tempered down version of what they really would want to bring to market or explain. And it's similar with Fidelity. So it stifles the innovation why people leave. So I fully would expect somebody that wins that is going to be kind of from an early rider or somebody that's new.
Yeah, 100%. I mean, the Fidelity and Block have the best top of funnel because they already have all the customers, but it's just the bureaucracy of the large organizations that, limits the amount of innovation and the speed that can happen in the industry.
Yeah, I think a prime example of that is like, what they announced at the conference a week or so ago around, turning on basically access to Bitcoin at all the terminals. Like that took years. Like people were calling for that for literal years, and it took them that long to get there.
And it's unfortunate because anybody running a business knows like the first step is literally like just getting punched in the face. Like you got to launch it and then hear the market's feedback and understand how to commercialize it and how to like get the right tooling and all the things. So like they're starting today theoretically. Obviously they probably have done some user testing, but to Brian's point, if they did it 4 years ago, they could have like disrupted, global finance or how like interchange works. So that's a great example. And then the use case of just buying Bitcoin or holding it or exchanging it for an intermediary good is like just like getting out of bed. It's expected. Like that's just the start. So then once they get there, somebody else is going to be running faster downhill. That's why I was thinking of like when Fidelity does multi-institution custody or Coinbase, like there'll be like 10 other products that are already out in the market leveraging that we'll be doing. So it's always going to be playing catch up behind it. It's similar with Blockbuster. I'm assuming try to do streaming and didn't work out for them very well.
Yeah. All right.
Great rip, guys.
Good rip, boys. Appreciate it.
Thanks, guys.
See you guys next week.
All right.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.